Welcome over to our 76 Research channel, everyone. Good to have you here. I'm back. We were just over on another show, right? This is streaming. We got different channels. I was just on the Trish Regan show, and now I'm here with Rob Hordon, my colleague at 76 Research. You know, lots of upside in the markets today. I want to first of all actually just welcome everybody who's joining us. Some people for the first time. Thank you guys for being here. It's a smaller channel, right? So we get a little bit more one-on-one time. So I do encourage people, if you have any questions about the market, throw them our way, because we're happy to try and answer some of these for sure. Again, great to see some familiar faces here on the 76 channel. Rob, I'm going to ask you, like, what do you think is really powering this market right now? Because you look at the economic data, which is not necessarily stellar, but you see that the Fed is really off to the races, so to speak. And I look at the upside in the market. I consider China. I mean, what is fueling this?
Yeah, if I had to break it down, I would say two things. It's stimulus and it's AI. Mm-hmm. So it's really, when you think about the stock market in the context of the economy, it's not really now. It never really has been, but now more than ever, it's not really a fair representation of the broader economy, because in the S&P 500, for example, you've got 30% of stocks are technically tech stocks. Another 10 stocks like Amazon and Tesla and Meta are classified as something else. That's almost 40%. A lot of other stocks are kind of classified in different sectors. So close to half the S&P 500 is kind of a technology play and really driven by what's going on in the tech space. But the economy as a whole is much broader than that. And it's sort of the everyday economy of people waking up and going to work and going out to, Chili's and driving around. And so that economy and home building. And so that economy is a lot different from the economy that's captured in the stock market. And that part of the economy is the part that's really been stifled by inflation and then the high interest rate policy that the Fed has had to implement to tamp down that part of the economy and cool down inflation. So it's interesting. We're moving towards a scenario where we're easing in the United States in terms of the Fed. Now a few days later, the Bank of China is easing, and that's helping commodity sectors very much, in addition to Chinese equities, which are up 10%. But on the tech side, you've got this sprint to what they call the sprint to AGI, artificial general intelligence. All of the big players investing hundreds of billions of dollars in developing AI capacity. So the tech sector is really booming, and it's getting kind of an additional support from the monetary authorities. So it's an interesting
point, right?
combination.
I mean, I watch, with great anticipation sort of what's going on in tech and Web 3.0, if you would. I've been writing about this for a couple of years, first sort of getting tuned in. I don't know, I want to say like around 2022, and the so-called metaverse. This was before, of course, Meta was named Meta, and the opportunity surrounding the space, which I think could be pretty darn magnificent. It's one of the things that sort of keeps me believing, because I don't like some of the long-term trajectory when you think about the debt load, when you think about regulation, and you think about the sort of political hiccups that we could experience going forward. But I do think that there's a compelling story overall within the tech space. It's going to be pretty miraculous in how it's going to improve upon productivity, et cetera. I'd like to sort of hear your thoughts on what we got out of Kamala last night. She talked a little bit about tariffs. There was this one moment which I actually thought was perhaps rather telling in her lack of fluency, shall I say, with the economy and economic policy issues. She kept talking about how she was going to somehow manage to get housing prices under control holistically, shall we say. Here, let's take a listen.
And assistance to state and local governments around transit dollars, and looking holistically at the connection between that and housing, and looking holistically at the incentives we in the federal government can create for local and state governments to actually engage in planning in a holistic manner that includes prioritizing affordable housing.
What's your view on that, Rob? I mean, can we prioritize affordable housing to the tune of $25,000 for each and every first-time home buyer and still keep housing costs under control?
No, I don't think so. I don't think providing subsidies to new home buyers is going to bring down home prices. Um, that's sort of obvious. Look, I think, I actually, I don't quite know what she was saying there. The word holistic, I kind of like that word actually when it's properly, applied. And I actually think Donald Trump is a pretty good holistic thinker who looks at things from different angles, in like, if we're really going to use the word correctly. But I mean, I think she's just sort of throwing it out there as sort of like, to confuse the situation and to sort of justify whatever actual policies she's actually thinking about when it comes to housing or, siphoning money off to the local transit authorities. So it's a dodge, and it's a word that they use in academia. I've noticed quite a bit to kind of make it sound like sophistication, but it's really just losing the audience in abstraction.
She talked a little bit about tariffs. Somehow Donald Trump is the bad one because he enacted all these tariffs. But the reporter points out to her in this next clip I'm going to show, and I would like your reaction to that, you know what? We still have those tariffs, right? On a lot of those goods from China. You never got rid of them. I'm curious your thoughts on what she says, but then we should have a broader conversation on tariffs in general, because the traditional school of thought when it comes to tariffs is that they're not good, that they're very hurtful. But there's, I think, a lot of economic thinkers, increasingly so now, that would just say, you know what, it's actually not as inflationary as you think. But let's first watch Kamala.
Tariffs aren't unique to President Trump. President Biden has tariffs in place. He's actually looking to potentially implement more. Where do you come out on? Is there a good tariff, a bad tariff?
Well, part of it is you don't just throw around the idea of just tariffs across the board, and that's part of the problem with Donald Trump. Frankly, I'm going to, and I say this in all sincerity, he's just not very serious about how he thinks about some of these issues. And one must be serious and have a plan.
Yeah, I mean, I think he is pretty serious in that he does have a plan. And in fact, his plan was so serious that she still has his plan. Right? Let me just ask you more broadly, though, about tariffs in general, because, again, the school of thought has been, you can go back to Smoot-Hawley and talk about how, maybe that's what actually helped to agitate and lead us towards World War II, because we were all sort of against each other because of all these tariffs in trade. But in actuality, nowadays, they're saying it may not be as bad as you think.
Yeah, and at least now we're actually, she's opening herself up to potentially having an economic policy discussion at all. So I think it's, that's progress, right? So, but it's interesting. Tariffs are a topic that I think people really need to, have more serious discussions around. And Trump has some very interesting ideas. So, look, I come from a background where I too favor kind of free trade and free markets. That's sort of my initial instinct. And I think that's sort of been conservative, kind of traditional conservative thinking for many decades. Yeah. But like, let's take a step back and really think about what is a tariff. It's basically a sales tax that's applied to imported goods, right? That the foreign importer, exporter has to pay to access our markets. So it is inflationary in the sense that any and all taxes applied across the economy are inflationary. If you tax something, whether it's corporate profits or whether it's capital gains or earned income, you're imposing a cost on the economy, but we do need to collect revenues. And I think what Trump is proposing here is another method of collecting revenues, but doing it in a way that favors some of the political and industrial goals of the United States. And what I would just to build on that, no one talks about how raising corporate income taxes would also be inflationary, but it would be. There's plenty of academic research. I read one study by University of Chicago Northwestern professors saying that corporate income tax hikes actually are 50% passed through to the customers. And there's very strong economic logic supporting that.
So that kind of pokes a hole in her theory that, everybody just needs to pay their fair share. That somehow, people just aren't. And in fact, that's a lot of what we heard last night. I'm going to go back to that for just a moment, because here she is saying, I can just raise corporate taxes. I don't care whether I got Congress along for the ride or not. She's got some interesting theories on this. I guess it's to be expected, given how this administration thinks they can defy the Supreme Court on college loans. But here we go.
Expanding that child tax credit, or you mentioned housing before, giving that extra money for a first home. If you can't raise corporate taxes, or if GOP takes control of the Senate, where do you get the money to do that? Do you still go forward with those plans and borrow?
Well, but we're going to have to raise corporate taxes, and we're going to have to make sure that the biggest corporations and billionaires pay their fair share. That's just it. It's about paying their fair share. I am not mad at anyone for achieving success, but everyone should pay their fair share, and it is not right
so
that
she,
the teachers...
She continues to go on and on about that, bringing back Rob into the conversation. Your thoughts? I mean, look, if you actually look at the data, I think what you'd find is that the wealthy are actually paying the bulk of taxes. But let's go back to corporate taxes for just a moment, because the reporter actually allowed her to kind of get away with that one. That was kind of a strange response in my estimation. She looked a little bit out over her skis. I don't know if she knew how to answer a question like that. So she just went back to a talking point, which was, let them all pay their fair share, and in hopes of maybe striking some kind of emotional chord. And I don't think she answered the question, something that, by the way, the reporter even admitted later.
Yeah, I guess she pivoted away from actually addressing the question of corporate income taxes and to sort of more kind of like taxes on the wealthy. But I mean, like when you talk about fair share, again, that's like the word holistic. It's it's an ambiguous. What is the fair share? What's the right level at which to pitch corporate income tax rates? I think one thing is if you look at like how we generate revenue in the United States, corporate income taxes actually aren't a huge source of revenue. So whether they go up or down a few percentage points, it actually won't make you're not going to solve the long-term budget, deficit problems in our major, kind of debt problems by slightly increasing corporate income tax rates or even, going after billionaires. That's not going to be the solution. There's actually not enough money there that's not that's not the problem. That's not the core problem. And the problem is when you start raising corporate income tax rates, there's a lot of negative consequences to that. As we just mentioned, it is inflationary. They'll pass through those higher those higher costs onto consumers. So it's inflationary. Some corporations could figure out ways to redomicile in other countries. And in general, it discourages investment. It discourages expansion of business because you're not keeping the rewards of your investments. So this is why we don't have onerous corporate tax rates. Why we try to keep them, at. I
don't know. I mean, hey, I was just over in Ireland. I'm kind of liking the 12% over there with corporate tax rates. And I realized, Janet Yellen earlier this year was out trying to say that somehow we're going to legislate the world, right? We're going to say, no, you can't have those kind of lower tax rates. And it's like, whoa, Janet, like is the U.S., you want to talk, I know we're the hegemonic power in the world. I know we're the biggest deal, but wow, you want to talk about throwing your weight around. You're now going to dictate tax policy for the rest of the entire world. That was pretty aggressive to me. And look, there are reasons why people choose to have lower taxes. But again, the U.S., it's up there. It's not like we can say we are one of the lowest. We're actually on the higher end, Rob.
No, that's true. We don't have particularly low corporate tax rates, and it probably would be net helpful to the economy to bring them down. And I think Trump, favors that. So,
He keeps talking about it. He definitely wants to do that. As we look at the market today, we're seeing all this upside. We got the news out of China like some 48 hours ago that they're coming forward with massive stimulus. You get the Fed working on massive stimulus. You get the ECB working on stimulus. How much of a risk is inflation in this environment? And by the way, like, look, I don't need to have a political sort of stake in any of this. I just want what's best for markets. And so I am looking at it saying, okay, do we run inflation risks? I think that we do, but I also think that, if you're really careful, maybe the excitement coming from the tech space will help to offset some of that. I mean, what's your take?
Well, what we're seeing with potential productivity improvements coming from AI and all of these investments, that might be our best like long-term hope of counteracting some of these more like structural features and just our massive debt load that will drive inflation going forward. So that, an optimist would say that we can hope for that, these productivity improvements, and they're real. You think about, I was actually just working a little bit on the 76 report and researching call centers. That's an area that's been flagged as like kind of first in line for AI. Something like 3 million people in the US work in call centers, and a lot of those people might be replaced by AI technology. So that, that's going to create its own problems in terms of layoffs, but that will, make labor markets less tight and be disinflationary. So just to illustrate how that works. Mm-hmm. But on the other hand, I was also looking back at the 1970s, and 1970 we had like the first real inflation hiccup where it got close to 6%, and then we had a little mini recession down. But we had two more inflation waves after that.
Amazing.
From in the 70s and the 80s. So it might not be
so
one
we're
and
not
done.
out of the woods yet. I mean, it's one of the reasons why we have the inflation protection portfolio, by the way. I'll just shout that one out. You can get the Founders Club and get all the portfolios plus the 76 report by going to 76research.com. Let me go over here and play for you some sound of Eric Schmidt. So this is the guy who founded Google, and he's pretty darn excited about what's coming. And I think it's worth listening to him on this, because he's basically making the point that this AI stuff is not overhyped. My recent trip to the Apple store where I tried on the goggles, right, convinced me this is not overhyped. There's just so many changes coming our way in terms of how we interact, how we communicate, and how work is done, that I think this is worth hearing. Let's play it and talk about it on the other side.
Everything seems to be all screwed up in the West and maybe the world. Everyone's unhappy about this or that, and it doesn't seem like a lot of progress on the important issues is being achieved. That is not, however, true in tech. I am really struck by how fast this next set of changes. I think of it as everything, everywhere, all at once. And the ability and the tools that are being invented here will shape our not only society, but our medicine, the future of history, war, and so forth, in ways that I think are largely unimaginable. And I know it's going to sound crazy, but I would tell you that this change is underhyped, not overhyped. The real question is whether societies globally are ready for it. In my world, which is largely the tech world, there is...
So I think it's pretty compelling and interesting to hear your thoughts on Eric Schmidt there.
Well, I mean, he certainly is a credible voice on this topic and is really close to I would assume extremely close to all of the developments going on. Google is neck deep in all of this AI development itself. And I mean, frankly, it's a little bit spooky to listen to him, right? Because, I mean, on the one hand, we definitely can see the economic opportunities and the productivity benefits, but, for someone so close to the technology to be kind of so convinced that it's such an enormous set of changes coming our way that it will have, first and foremost, social impacts. That's very interesting. So this is coming our way. I mean, everyone from Elon Musk to Google to Meta, Amazon, they're investing in these LLMs, these learned language models. They're buying those NVIDIA chips, and they're competing with one another to develop, more and more AI, general intelligence computing capability. And we've already seen like snippets or like little tidbits of, through Chat GPT of like how amazing it is. And what if they're right? What if it's actually going to get 10 times more amazing or 100 times more amazing? Or the models are going to teach themselves how to program better and better models.
Okay, so now I'm getting,
I don't.
that's what's like sort of scary about it, right? I mean, it's a little bit, I remember interviewing this like science fiction author. He's a very successful software entrepreneur, and he'd actually been a PhD in artificial intelligence, like back in 1978 at University of Maryland. And he was like, I came out, not everybody was really interested in artificial intelligence back then. So he wound up writing code and was very successful. And he's like, I've written enough code. I'm going to write a book now. My biggest concern is sort of AI taking over the world. What do you, I mean, I guess this is partly what they're trying to think about. There was a big story, I think it was in the Wall Street Journal just last night, talking about how OpenAI is actually rethinking, right? It's goals. It used to be for sort of common good. Now it's like, well, we want to make some profits too. It's a balancing act, I guess, because we want this progress and we need this progress.
Yeah, no, it's interesting. I mean, OpenAI becoming, I guess, a for-profit entity. And I don't know, I know personally, like maybe I even feel more comfortable with it as a for-profit entity, that there's potentially
Explain
more
why.
accountability. Well, just in terms of there being more accountability, like private corporations, there's like they answer to shareholders, they can be regulated. I get a little nervous when nonprofit entities. You look at universities and how they conduct themselves, or other foundations, right? They sort of do what they want. They don't really answer to shareholders, so I don't know. Maybe we're better off if OpenAI is just a business and society has more control over that. But like, look, China's also in on the act. They're developing their AI models and they're involved in this competition. So the AI models are coming, and that capability is being improved and expanded. And hopefully it translates into a great productivity boom for the world, where basically, the computers are doing the hard work for us, in medicine, in law, in business, across the entire service economy. And hopefully they work for us, and, we don't work for them.
Yeah, no, seriously. I mean, I saw something the other day, or somebody was talking about how they really would prefer the AI do their household chores as opposed to writing something, right? Because the writing part's kind of fun and creative, and as human beings, we like that. But we'd really rather not have to, make our bed and vacuum the kitchen every day. Like that's perhaps in some ways like the AI might take over some of the fun and creative stuff. But I don't know. I still fundamentally believe that we as human beings have this tremendous power, right, to imagine. And that imagination is everything, which is what fuels all of this to begin with. I mean, look at Elon Musk, right? Imagining that we could have this EV industry. I'm not like really about the EV industry, right? And you look at the industry itself, despite all the money that the Biden administration put its way, courtesy of the Inflation Reduction Act, you got Toyota backing out saying we're just doing hybrids now. You've got Avis Rent-A-Car. I think, no, forgive me, it was Hertz. Even after having, Tom Brady to billboard their plan for all their EVs. Nobody actually wants to rent an EV in an unknown place, because guess what? You may not be able to fill up your tank, so to speak, or charge your vehicle. So again, like I think Elon is amazing, and he imagined something that is coming to be, but simultaneously, like, market forces are at play. It's not like something's just going to take off and go wild, because human beings still have some say in all this.
Yeah. Well, Elon, what he's working towards, a big application of AI is autonomous vehicles, right? Self-driving cars. And that's, a lot of what's driving his investment in this. And that, that could just be, forget about electric vehicles. We're talking about self-driving vehicles. And
that could be pretty cool. And actually that could be a game changer. It's not perfect because I don't think any one of us really wants to trust a computer with our lives.
Yeah, not yet.
For obvious reasons. What?
Not yet, but what do you think happens when we get on a plane, right? I mean, it's I think it's sort of inevitable, and to tie all of this back a little bit to markets, when you think about the S&P 500 and just the broad opportunity in the stock market, you do have a lot of these players. They're like directly leading the way in AI, but the companies, the businesses that will really be able to exploit this technology are going to be like the larger, bigger companies across multiple industries that have the that have the ability to make the necessary investments and implement these productivity tools. So when you think about the AI upside opportunity for the stock market, it's both like the tech companies that are going to deliver it, but then all of the companies that are really going to like make use of it and use it to improve their profitability and deliver better products. So
let me go to one of the questions from Peace of Mind. Peace of My Mind is writing, what about AI hackers, AI pirates? Those are real concerns. I mean, but you know what? Like, it's real concern everywhere, right? Maybe that's a play on the cybersecurity sector, if you would. I don't think we have any cybersecurity stocks in our portfolios, but again, like I think that there's a lot of different ways to think about this, and maybe Peace of My Mind, that becomes an interesting or compelling investment opportunity because obviously you're going to need that cyber tech in order to protect against things. We need it today. Let's be honest, right? Like I remember back in the day when they were first asking for your credit card on the phone. And my mom would be like, well, I'm not giving my credit card on the phone. Like, maybe you would fill out a form and put it in the mail. And you think about the ease by which, we do all our online banking, et cetera, today. We are all kind of sitting ducks in that sense.
Yeah. I mean, I know, the cybersecurity software companies, they're heavily invested and involved in, AI technology. So it's a big element of it.
Yeah.
I mean, and I think actually, Peace of Mind had a similar concern regarding cryptocurrency and the vulnerabilities there, and I think it's somewhat related. Where the challenge for a lot of digital assets and cryptocurrencies is to preserve their integrity in the face of potential hacking and other technology kind of invasions of the system.
I want to go to one of the charts that I've shown. This is for last quarter, and I know that we'll have monthly numbers coming out shortly for September. But I mean, this is the income builder portfolio that we have. And again, I would remind everybody to go over to 76research.com and you can subscribe to those portfolios there. And we have all the stock names and a ton of research on them. These are companies that Rob and I really believe in long term. And so whether you're going for growth with the American Resilience portfolio, whether you're going for getting some kind of dividend income stream for retirement, that the income builder would be an appropriate choice, or whether you're looking for that inflation protection, there's a lot of ideas there. In fact, inflation protection, I mean, we've got an idea in the copper space that's in that portfolio that actually we talked about on the 76 report, 76report.com. Use code word $deal, LLAR, to sign up. No harm, no foul. You can cancel anytime, but you can get some of those names. And I think that this is pretty striking. But look, I mean, it's not easy, dare I say, right? Like, it's not easy to figure out how to invest, where to invest. And, hopefully that's where we can come in and offer some insight that matters. We've got an income builder portfolio. That's great, Doug. I'm so glad to hear that. He's got the income builder portfolio, which has, I was just showing the numbers there. It's been pretty darn impressive since we, just over the last quarter, but certainly since launch as well. So there's some good opportunities in there. And Doug also joining, talking about precious metals. He actually has a question on silver. I'm glad you asked this, Doug, because people ask about silver a lot. I mean, like, I like gold, right? You've heard me talk a lot about gold, but silver is kind of interesting in that it's almost a proxy, if you would. I mean, it's almost more volatile for sure. It doesn't have this sort of, how do I say, the reputational heft, right, of gold, or the track record of gold, Rob. But oftentimes when you see gold take off, silver can kind of tag along there for the ride.
Yep, I don't have very firm views around silver, but I think an interesting analogy is we've been talking a little bit about the relationship between Bitcoin and Ethereum, and Ethereum is kind of like silver to Bitcoin's gold, where
I disagree. We'll have a debate on it. Go ahead.
Oh, cool. Well, no, because silver actually it's a precious metal, but it has a lot of industrial applications. So it's
okay. That's fair.
yeah. So silver's value kind of is impacted more by actual real world technological use. Whereas gold really functions as a pure store of value, has pretty minimal industrial. I mean, it's used on the margin in for, gold fillings and in some very high tech situations, but because it's so expensive, it's not really useful as an industrial metal. Silver has a little bit more utility in that way, and kind of like how Ethereum has utility.
So that's exactly. I hadn't really thought about the utility of silver in the same kind of way. I usually think of copper, for example, as having the utility, but you're right. I mean, silver. So maybe I don't disagree with you as much as I thought. I mean, Ethereum, to me, is sort of the working crypto, right? The one that you can work with, that enables you to settle contracts in real time. And you talk about the metaverse and Web 3.0, I would suspect that Ethereum is going to be a big part of that, and Bitcoin as well, or perhaps some other thing that we just don't yet know about. But that technology is pretty darn compelling. And as far as Ethereum goes, your ability to settle contracts in real time. Don, who's listening to us right now, Don was actually a CME trader in his background. So, I've said, I wonder if Ethereum blockchain could one day replace the CME. I don't know. But to me, that's what it represents, some applicability.
Yep. Well, and in parallel with all of this AI development, you've got Wall Street is really moving in the direction of embracing blockchain technology and tokenization. And you hear about it, they not only want to get in on the business of owning digital assets, but they're really implementing this technology, really just kind of more in like the back end plumbing of, moving away from a model of like securitization and like kind of the old model towards this kind of direct electronic attachment between owners and sort of business entities or assets. So that's happening as well. And one of the reasons why I think, like people really should be getting up to speed, and why I'm getting up to speed on these digital assets, because, it's not just speculation. It's technology that's really being implemented into the financial system.
Okay. Forgive me. It was CBOE that he was at. Thank you for the correction, Don. There you go. He's also pointing out copper's been badly mangled by China for the last 20 years. Sure. That's a fair analysis. And, look, there's a lot of outside play, right, with China in terms of what they're doing that has a direct effect to China. But I mean, forgive me, to copper. But I still think that there's opportunity, or at least I did. I mean, I know that we issued a call, if you would, so to speak, just our optimism surrounding this one copper play, and that was a while back, right? Like as we started.
Yep. Yeah. When we launched back in March 1st was when we really launched the model portfolios. And then we wrote about it shortly thereafter. But yeah, no, copper is interesting. I mean, so it's sort of the long-term outlook for copper is actually really favorable because, it's the metal of the future. Really, you need copper. It's like the only metal that can really provide the conductivity needed to really build out this sort of electrified future with all these data centers.
That's actually a really good point.
Yeah. Electric vehicles, everything, I don't think anyone can really bet against that the world is going to be more electrified in 10, 20 years than it is today. That's happening. But the volatility in copper comes from China, because copper is still a metal that's really used in construction. And so the Chinese real estate market and kind of the swings in capacity utilization and all of their kind of traders, the copper traders and smelters, like that's created a lot of volatility and probably will continue to. But I think, the long-term upward trajectory of copper is something to bet on. It's also very supply constrained. It's very difficult and expensive to mine copper. It only is available geologically in certain parts of the world. So that's sort of the copper story, why it's really an attractive long-term story.
Oh, look, there's a lot of exciting stuff happening right now, even as we face the prospect of a potential recession, which is why, you get the Fed moving so aggressively in ways that they haven't moved in 16 years. And that's because they're trying to ward off this recession. We hope, that's best case scenario. Worst case scenario is it's entirely political. Let's hope not. But, they're seeing something that, maybe some people don't, and they're acting accordingly. I just kind of come back to basics, which is the old adage, don't fight the Fed. The Fed is now entering an environment where they're going to keep, one suspects, moving rates lower. And as long as that's happening, I'm looking for where my best opportunities are, because that's sort of the wind in the sails, if you would, for equity markets.
Yep. And the more liquidity the Fed, and now I guess now you have to adapt, don't fight the Bank of China either, right? But the more liquidity that they throw at the economy, that's just a tailwind for valuations. And then think about it though in the context of businesses that really aren't all that sensitive to what's going on Main Street and the labor market. They're going to keep, they're going to have that tailwind from the liquidity injection, and not really necessarily the same level of risk that other businesses could have if there is kind of broader economic weakness, contraction, even a recession. So you can see why.
These are interesting times. And, I keep telling people, remember, you can't just, take your ball and go home. I realize, things may not be perfect on the political front. Let's hope for the best. But the reality is this: the Fed is cutting, and there's a tremendous sort of tech revolution that's going on that we all can stand to benefit from financially anyway. And so you want to be engaged. You want to be part of this. Sign up for the 76 report, 76report.com. Use code word dollar. Our gift to you, the first 2 months, is just $1 a piece. You can cancel anytime. It goes to $9.95 thereafter. And you get lots of ideas on how to invest, a lot of perspective. We offer some of that, not all of it, obviously, some of that for free here on the YouTube channel. So make sure you sign up, subscribe. It's really important. I love what we're doing over here because it's a chance to kind of roll up our sleeves and dig in. And, Dawn, I'm looking at your comments here and your background as a treasury bond options trader, gold, silver on the CBOT for 15 years. It's amazing. So this, my background is originally in finance and started in emerging debt markets at Goldman. And Rob has been a stock picker for 20 some odd years now, and just one of the best in the business, period. So we hope that our ideas here together can help the everyday investor. We don't stand to gain anything. We just charge you a flat fee for the research so that you can do the investing, as opposed to the industry itself, which kind of has their hand in everything. So this is just to help generate ideas for you. And I'm super excited about it. So thank you, Michael. It's good to have you here. Michael Peltier on our Facebook page. We've got so many people coming to the YouTube page increasingly. It's a very small little channel, but we're working on it. And Don, I'm looking at one of our viewers here, Don Bacai, he's been on my big channel now, we can call it that, over in the Trish Regan show. And he's been there from the beginning, back when the microphones didn't work. So Don, we appreciate everything there. And Peace of Mind got a kick out of you pointing out new slogan, don't fight the Bank of China. And Doug, I'm so glad Douglas Nunes is saying that he likes the information that we provide. So I'm happy. We're here to try and help you guys. And look, you make your own decisions and you do your own investing, but anything that we can do to kind of help create some excitement and get you started and off to the races. Again, these are 3 portfolios that we have that we really like. We've got a big report, right, for the end of the month coming out.
Yep, next week.
Right.
Yep.
I know we're working on that. So we'll continue giving you guys lots of information. Make sure you subscribe. Make sure you share. Make sure you comment, even if it's after the fact. We definitely read all the comments here. Definitely, right? That's the beauty of being a small channel. Thank you so much for tuning in, everyone. And we'll see you next time.